Well, earlier in the day, we also spoke to Adrian Lim of Aberdeen Standard Life, and he's currently betting big on Indian banks. He's bullish on IT, or he's been bullish on IT, and he also believes that cement or Indian cement stocks still have a long, long way to go.
I think energy prices are always a decision, a factor for countries like India, where we import a lot of the supplies and the fuel, and it's something that cannot be overstated. The government has done a good job being as prudent as it can. I think the introduction of the GST was good. It widened the tax base and the tax net, and it's also something that needs to, it's a reform that's very useful in terms of simplifying businesses and bureaucracy. We have a very diversified approach into rural India, and it's not just Honda, it's Levers, it's Godrej, it's ITC, it's things like Group Finance that we hold in some of our funds. What is important is that the rural strength will come into fore over the next decade or so. Not all of that is commercially viable at this point in time, but many Indian companies, the better ones, the better resourced ones, have got rural strategies that have a long view in mind, and we welcome that. We have Ultratech, which is a bigger position. We have a bit of Ambuja. Cement is important. We like the cement companies, but it's been a very checkered short-term history. We have had demand come and go, prices firm up and weaken, and it's quite region-specific, and it's too early to call a sustainable recovery in cement yet. There is still quite a bit of overcapacity. Utilization levels have solidified to some extent. HUL has got a strong network, a strong port.
Well, that's Adrian Lim, important voice, talking about how crude oil price is a concern for a country like India, and FMCG sector seem to be overvalued at this point of time, liking Ultratech in cement versus ACC or Ambuja, and that was his view on India and some sectors related to our markets. Let's take some